All right, you guys, so here we are in lesson one, and today is all about understanding futures basics and just getting your account set up. Remember, the point of this boot camp is to get you up and running, being able to do what I can do, what I show every day on TikTok in the least amount of time. Like, yes, trading can take a long time to learn, and even after this boot camp, this is only going to be a fraction of what you know about trading, but this is going to set you up to have the foundation to go anywhere you want to go. This is just a quick disclaimer, read through it when you can. Just basically saying that this is all educational. This is not specific personal financial advice. I'm not advising you to buy or sell a certain stock, okay? This is all intended to educate and should not be used to make financial decisions. I'm not a, um, like, you know, All right, so the objectives of today's lesson: one, understand futures basics, and two, set up your accounts. So, because this is an accelerated boot camp, we are just going to go over the absolute basics of futures that you need to know and try to make it simple. This is not going to be like your straight out of the dictionary, straight from a financial advisor's, book. This is not going to be perfect, but it's just going to be what you need to know. Now, before we start talking about futures, let's talk about trading in general for my super newbies. Because trading is a very broad term used to describe a wide number of ways to use the stock market for financial gain. Okay, so let's do a brief overview. So, what do you trade? In the stock market, you can trade a ton of things. You can trade stocks themselves, ETFs, which are kind of like funds that include a whole bunch of stocks bundled together. You can trade futures contracts, options contracts, forex, cryptocurrencies, and you can even trade bonds. I'm sure a lot of us have heard of all of these instruments that you can trade. How? There are also several strategies for trading all of these things, right? You can be a day trader, a swing trader, you can be a long term investor, or you can even be a scalper. I consider myself a scalper. Day trading is essentially you hold a trade for, a couple of hours up to a day. Swing trading could be you hold it for days up to weeks. Investing, you're holding long term, like years, maybe even getting dividends paid out. Scalping, we are holding minutes. You know what I mean? So, like, maybe 30 minutes max or something like that. When can you trade? Well, the stock market trading occurs during specific hours. So in the United States markets, they're open from 9:30 a.m. to 4 p.m. Eastern for stocks and ETFs. But futures, for example, you can trade futures almost around the clock. There's like an hour and a half where it's down, and you can start trading again at like 6 o'clock in the evening Eastern time. And then where do you trade? Like, how do you get access to doing all these things? You use what's called an online broker. Back in the day, they used to have those images of people standing in a big room yelling and calling out trades. Well, it's not like that anymore. Everyone has the freedom and the ability to be able to place your own buy and sell orders, place your own trades. And so that is what has given so much access to, regular people like you and me to be able to use this to make money. So now that you heard this, you can see if you just tried a bunch of different combinations, like maybe long term investing stocks, you swing trade ETFs, you scalp futures, like there's so many different ways that you can trade. And we're not even getting into the different strategies of how you trade. So trading is just a really, really broad blanket overview. And so what I'm giving you is my strategy that I'm using to trade futures. And that's where we're going to go from here. All right, so now let's go into the futures concepts. So futures in futures you trade contracts. So in a stock, right? I think most of us are more familiar with stocks. Like if I say I want to buy Apple stock, if I go and buy one share, right? That's me. I'm buying one share of an Apple stock. Like period. I know that's one share. Well, a futures contract is a different type of instrument. A futures, it's actually a contract. It's an agreement that you're going to buy or sell the asset like an Apple stock at a predetermined price on a date in the future. It's basically like speculation. It's like saying you agree to buy 1,000 barrels of corn at $50 a barrel, and it's supposed to be delivered in 90 days. Well, in the meantime, maybe all the farmers near you got their farms just got hit with like a terrible storm, a drought set on fire. So now the corn is more scarce and so it costs more. So now the price went up to $60. So now you got a profit of $10 per barrel. Or maybe something else happened. Maybe the opposite happened, and all of a sudden there's more competition in the market. All of a sudden, three more farmers popped up with the best corn in the world. So now it dropped to $40 per barrel. So now that's a $10 loss per barrel. You told them you're going to buy it for $50, but they said, no, no, no. Now I'm going to sell it to you for 40. So you lost $10 a barrel. And just in the opposite example, you said, well, I'm going to buy this corn for $50. And they said, oh, well, dag, it's $60 now, so I'm gonna have to give you $10 a barrel. So that's how you make money. So you make money from futures by buying at a price that you anticipate it to go up or down. So it seems complex, but at the same time, you're going to enter buy agreements when you think the price is going to go up and it's going to make you money. And you're going to enter sell agreements when you think the price is going to go down. So then, even though the price is going down, you're able to make money as well. So futures contracts are complex financial instruments. I have to say this just as a disclaimer. So you can research more at this link right there. It's called the CME Group. I'm going to tell you guys right now, I did not do any more research than this. This and what's on the next page, I did not do any more research than this because of the way that I trade futures, because I'm a scalper and I'm holding these contracts. I'm holding them for very short periods of time. I'm not really worried about the rest of it. I'm not worried about, well, what happens when that 30-day mark comes and I still have the contract. I'm not worried about that because I'm not going to have the contract. I'm selling it in a couple of minutes. So in that last example, I used barrels of corn as an example. That's because futures contracts can represent many different underlying assets. So you can buy one contract that represents gold. You can buy one contract that represents the US dollar or the Japanese yen. You can even buy contracts that represent a barrel of corn or a bushel of wheat, whatever they call it. So you guys know from TikTok that I trade ES. So when I say I'm buying one futures contract of ES, I'm buying a bundle of the S&P 500 index. That's what ES is short for. If you're on like trading social media, you also see that a lot of people trade NQ futures, and that stands for that. The underlying asset there is the NASDAQ or QQQ. You might hear that a lot. So the underlying asset for ES is the S&P 500, like SPY or SPX, and the underlying for NQ is QQQ or NASDAQ. So the ES contract allows us to speculate on the future price movements of the S&P 500. So if I'm looking at a chart, right, and I say, well, I think it's going to go down 10 points, I'm going to sell and wait for it to go down those 10 points and I made some money. If I say I think it's going to go up 5 points, I'm going to buy, and after it goes up those 5 points, I'm going to make some money. So when you trade ES futures, you're essentially betting on whether the value will go up or down. And the price of the futures moves with the index itself, right? So if you're looking at SPX and it goes up, then the price of futures goes up also. But you're not actually buying and selling the stocks, you're trading a contract, okay? So that's all you have to know, is that you are trading a contract. So I know that was like kind of boring, and we may have to go over it a little more in our weekly call, because it's not like, if you have not been a trader before, it's not the easiest thing to grasp the first time. But let's get down to the nitty gritty and talk about how do we actually make money with futures. So the first thing you have to understand is a tick. A tick is when you think about a stock chart, right? You think about the stock price or the ETF price going up and down in terms of dollars and cents, right? You say, I looked at Apple went up $1 today. Google went down $2 today. Well, in futures, we're referring to these movements up and down as a tick. It just means that if it went up by one increment, that's called a tick. So for ES, each tick is 0.25 index points, a quarter of a point, right? And you can think about it. To me, it's easy to think about it in terms of dollars. So you can just look at this as a quarter, like a quarter of a point, right? So what this means is that the price of an ES futures contract can move up or down in increments of 0.25 points. So, and I'm going to go over to the example real quick. So if the ES futures price moves from 4,000 to 4,000.25, that's one tick. If it moved from 4,000.25 to 4,000.50, that's another tick. If it moved from 4,000 to 4,001, that's 4 ticks because 4 quarters go into a dollar, right? 0.25 goes into 1 4 times. That's the easiest way for you to think about it. Now, the way this translates into money is that for ES futures, 1 tick equals $12.50. So for that same example, where the price moved, your contract moved from 4,000 to 4,000.25, if you had an order in on that contract, you would make $12.50 because it moved 1 tick. Now, if it moved from 4,000 to 4,000.50, like 4,050 cents kind of, then you just made $25 because we're doing 12.50 times 2. Okay? Now let's look at this simplified. Okay? For every dollar that ES goes up, you gain a $50 profit. That is honestly the easiest way to look at it. For every, and I say dollar, I know that's not the proper term. It's really for every point, but let's just put it in terms that we can understand, right? For every dollar that ES goes up, you gain a $50 profit. So if you bought ES at 5,000 and it went up to 5,001, you just gained $50. If it went up to 5,002, you just gained $100. If it went up to 5,003, you just gained $150 because every dollar it moves goes up $50. And it's going to incrementally move up and down based on the actual number of ticks. And the reason it's like that is because 4 ticks equals 1, and 4 times 1250 equals 50. So that's how the math works out. So let's look at some more examples. Here's a formula you can use to calculate your profit and loss per trade, right? So first you're going to look at the contract increase and decrease amount, meaning where you bought it versus where it ended up, okay? Then you're going to multiply that by 50 because for every dollar, right, you gain, or for every dollar or every point, you gain $50. And then you're going to multiply that by the number of contracts. Because so far we've been talking in terms of you buying one contract, right? But you can buy based on who you're trading with and how much money you have in the broker itself in your account. You can buy as many contracts as you want. Now, obviously, we're not going to do that to start, and that's not recommended. But you don't have to just work with one contract. And buying more than one contract obviously doubles, triples, quadruples your profit. It also doubles, triples, and quadruples your loss. So you want to be careful with that. So anyway, let's look at this example. You bought one contract at 6,050, and it increased to 6,007 and 75. So first you're going to do the increase. We're going to subtract that and look at the difference there. It gave us 7.25 points. So now we take that increase, 7.25 points, and we multiply it by 50, and we get $362.50. Now you multiply that profit by how many contracts you had. So we only had one, so our final total is $362.50 off of one contract. Let's look at another example where you bought two contracts. You started at 6,001.25. It increased to 6,010.75. So you find out how much it increased. So we just do a little subtraction. It increased 9.5 points. So you take that 9.5 point increase, you multiply it by 50. That's how much you make per point. So you multiply it by 50 and you get $475. Well, you bought two contracts, so you take that profit and you multiply it by 2. And you get a total of $950 on that trade. Okay, so that's just the basics of futures, the contracts, and how you make money with them. Okay, so what we're going to go into now is how to get your account set up. And I'm trying to keep these lessons short so that you can watch them again and again if you need to. But let's see. All right, so here's what you need in order to get started. To start trading, you need a broker, a charting platform, and a strategy. Now, the strategy is going to be covered. It's called supply and demand. That's going to be in lesson 2. But if you don't have one already, you need to set up a broker and a charting platform. I gave you some examples of what you can use here. The top ones that I would suggest, I put the 3 asterisks beside the ones that I currently use. So at the top, you're going to see NinjaTrader for both the broker and the charting platform. NinjaTrader is who I use with my prop firm, and they're who I use for my live account. The reason why is because they give you the most margin, and you can buy you can buy more contracts with less money. We'll talk about that in another lesson because no one is starting a live account right now. So we'll talk about that a little bit later. Another one that's very similar to NinjaTrader is Tradeovate. Then you also have TradingView. In terms of charting, the one that's different there is Thinkorswim. That is the charting platform that I use. It is a little more complex and in depth, but I think it gives you better and more accurate levels. It gives you better and oops, hold on. It gives you better and more accurate price levels, so you can be kind of more exact when you're entering and exiting your trades. So what I'm going to go over now is how to get started on NinjaTrader. If you want to have two different platforms, some people just want to keep everything simple and have one platform. If you want to do that, you can most definitely use NinjaTrader. But again, I use NinjaTrader and I use Thinkorswim to chart. Okay, so you can right now. Let's go get your platform so that you can begin following along with me and entering and exiting trades like as early as lesson 3. So first you're going to navigate to NinjaTrader and click open account. That's this button here. After that, go ahead and enter in your email and press sign up. I would suggest doing email instead of these versions, but do what you want to do. After you enter your email, you can create your username and password, agree to the terms and conditions, and click create user. Okay, now on this page, obviously this open account button is right here, but what I want you guys to click is this little blue icon that says not ready for live trading, start a risk-free trial of simulator trading. After that, you're going to just enter in a little bit of information. It's not going to take a card. It's just going to take your name and phone number. And then boom, you're all set up. You're going to have a $50,000 account, which is very similar to what you'll get if you were using a prop firm. We'll learn about that in a later lesson as well. So at this point, choose how you want to download your platform. I use both, to be honest. I use desktop and web, but I would say if you have the time, get used to both, learn how to use both because you might be in a situation where you need one and you need the other, but choose whatever you want for now. And then finally, after you get everything downloaded, if you go to the web-based platform, this is what you'll see next. And you just click access simulation and then you are all done. That'll take you into the web-based chart. Don't If it overwhelms you, don't worry about it. We're going to set these up, I think, tomorrow. All right, if you have any questions, feel free to email me or just reach out and I'll be glad to answer. All right, bye.